the president has predicted that Ian will be the deadliest hurricane in Florida history, and the governors of 4 states, Florida, Georgia, South Carolina, North Carolina, and Tennessee, have all said to plan on post this tropical storm phase of the storm for the thing to go into the Atlantic, regain power, and then come back and make landfall again. The Carolinas and Georgia particularly in its path. There's even some possibility that it might head up to New York City. We'll see. Anyway, my next guest is the president of Walser Wealth Management, Rebecca Walser. Rebecca, thank you for joining us. And in fact, you are reporting to us tonight from beleaguered Tampa. Give us a quick update on your situation.
Yeah, without power, so doing the best with, backup power sources and backup Wi-Fi sources. And so it's a challenge, but certainly, Kevin, nothing like the people in Fort Myers that have just been decimated. So my heart goes out to them, and I know the communities are pulling together, and we just need so many, help with the power and the phone lines and just all, obviously not phone lines, but the power lines and all of the ways that people get power. This is the biggest issue. I think we have still hundreds of thousands of Floridians outside without power, and I know I'm one of them. So
I know that's going to be something that you guys deal with for the next couple of days, but I have to say I was impressed with your governor. I saw a drone flyover of the power trucks already lined up and ready to go. I believe there were 42,000 electricians ready to be deployed as soon as the storm passed. And I know those guys have probably worked for the last 24 hours trying to get everything, hold everything together. It's really, really tough. And Governor DeSantis today saying it's just going to be ugly, but there's a lot of work to be done and to get started doing it. So I love the spirit of that.
We have a great leader at the helm. We have a great leader at the helm. So we're really lucky to go through such a tragedy with such a great leader. So I'm sure we'll be fine. I
think that you're in pretty good hands. Well, thank you for rigging up the emergency power to join us tonight. I appreciate that. The feds are going to do what with interest rates between now and the end of the year? What's your take on what the Fed wants to do?
I think they're going to try to get us above 4 arrangement. So we still have about another 125 basis points to go to get to the level that they want to get to. So that means that we'll see changes again, October, November, December, to get us another 1.25 higher is what I'm expecting. So maybe another 275 basis points or a 75 and a 50, something like that. But I expect that they definitely want us to get above 4. We're still going to be nominally we have a positive interest rate, but we have real negative interest rates right now, Kevin, if you think about it, because even if you have a federal funds rate above 4, with the rate of inflation, which is what the federal government reports, is somewhere in the mid 8s to 9, real numbers are about 17. But let's just take the 9% number. Well, if you've got a Fed funds of 4 and you've got a real inflation rate of 9, you're still negative 5. So we don't really have a true real inflation, interest rate yet. And eventually that's what you have to get to. So it's a lot more pain still to come, Kevin, unfortunately.
Well, and let's talk about exactly what that looks like. I have opened up my E-Trade app for the last 6 days, and it has done nothing but bleed on me. What does this mean to the markets? And for people that are like me and psycho and checking their portfolio all the time, actually I do some trading, so it's not entirely in vain. But what should we be thinking about what we have set aside for retirement and otherwise?
And I am such a positive person, so I just want to preface what I'm about to say with, I'm sorry that I have to be the bearer of bad news, but I think
that's okay. My app's been bleeding at me. I can't, there's nothing else I could do. It's just all red. There's no green on the whole screen. It's just, I think we were off, another 300 points or so today. I mean, it's not gotten better for quite a while.
Yeah, over 400 down on the Dow today. It's what I have been saying. I was with Andrew before, and I told him this as well. This is big, Kevin. We're going through a global financial change. What everyone is, the central bankers are trying to push us to the Great Reset. I see that is not going to come to fruition, and that we're actually moving back to currencies that are backed with hard assets again. But what that means is whether we get the Great Reset or we get hard asset-backed currencies again, either way, those are the two options we have before us. And whichever option is chosen or comes to fruition doesn't matter, because they both do the same thing to equities and bonds that we currently are holding, which is they do unfortunately bring them down substantially. So unfortunately, Kevin, I see that this equity market is still going to retrench back substantially more, and bonds have already collapsed globally. But as we continue to raise rates, a lot of debt in the world is denominated in US dollars as the world reserve currency since 1944. And so that is unfortunately, a strong dollar is harder for all these currencies. The other thing that has happened in the last literally 30 days, we've had the Reserve Bank of Australia, RBA, basically insolvent. They're insolvent now to the tune of $12 billion. And that's a problem. But then this week, in fact, Bank of England came out and let us know that they had to intervene into the bond market and buy bonds, or they were going to have pension insolvency. So what we're seeing is the Bank of England, the British pound beginning the verge of collapse, the Australian dollar obviously collapsing. This is a currency collapse globally, and the US dollar is the strongest, but it will be the last, and it will also come to us eventually. But we're going to see massive changes, Kevin, before the end of the year.
Well, let me ask you about that, because the Chinese started buying, well, they've kind of double backed the yuan with oil and gold. And they've bought more gold, I think, than anybody else on the planet in recent years. How do you see those two being in competition with each other, the yuan and the dollar?
I know that once Russia got kicked out of SWIFT, the BRICS nations, so that's Brazil, Russia, China, India, and South Africa, they've been really working on an alternative to the dollar as a reserve standard for 20 years. But now that they got kicked out of SWIFT, this has really sped up this alternative. This is exactly what we're talking about, Kevin. So the fact that Russia and China are coming together to say, hey, we are going to have an alternative to the US dollar. The petrodollar is broken since Russia got kicked out of SWIFT.
Okay.
And we no longer have all oil sales being denominated in dollars, which is a huge problem. We haven't had that happen since 1974. So the petrodollar has ended. We have Russia and China coming together to give us an alternative reserve currency. And so this is why I'm telling you, this is exactly why I'm saying, Kevin, that I see us going to a multipolarity world backed with currencies backed by hard assets.